Welcome to the deep dive. This is where we roll up our sleeves, crack open a stack of sources, articles, research, notes you've shared with us, and pull out the absolute best stuff just for you.
Yeah, the goal is really to give you that shortcut, right? To
Yeah.
being genuinely well-informed.
Exactly. Maybe with a surprising fact or two that sticks with you. Today, we're plunging into a really core challenge for, well, any organization. Figuring out what the market is, what it wants, and how to plan for the future in a world that just won't sit still.
It's the fundamental stuff, isn't it? You can have the best product, the best service, but if you don't understand the landscape you're playing in or, how many people actually want what you're selling, you're basically flying blind.
Totally. And the sources you've given us lay out some really robust frameworks for tackling this. We're talking strategic planning,
Hmm.
that crucial process of understanding where you stand right now, your strengths, your weaknesses, and what's happening outside your walls, the opportunities and threats, what the sources call SWOT analysis.
Right, SWOT. We'll
Yep.
definitely dig into that.
And crucially, how you turn all of that insight into a solid plan. But look, a plan is kind of useless if you don't know who you're planning for and how many of them there are.
Yeah, absolutely.
So we're also going to take a really close look at the, let's say, art and science of measuring and forecasting market demand. Because as the sources show pretty clearly, getting those numbers wrong can just throw the whole business completely out of whack.
Oh, for sure. The sources make it clear that navigating today's market, with its incredible pace of change, it demands both a disciplined approach to planning and the flexibility to adapt when things inevitably shift.
Like that HP example in the source note.
Exactly.
Yeah.
A tech giant, right? Had to reassess its entire corporate strategy because market dynamics like PC sales slowing down changed the whole game. You have to be constantly learning, constantly adjusting. It's not a one-and-done thing.
Okay, so let's get straight to it then. We're going to unpack these sources to give you the clearest, most useful understanding of these critical topics. Strategic planning with a real focus on SWOT, and then diving deep into forecasting and understanding market demand.
Sounds good. Our mission, as always, is to make this understandable, applicable, and maybe even, a little interesting.
Let's try. Where do we start? Strategic planning.
Let's start at the top with strategic planning.
Mm.
For large companies, this isn't just one monolithic plan. It actually happens at multiple levels.
Right, like those nesting balls, yeah. You've got the big corporate strategy deciding which industries or markets the whole company plays in.
Then you drill down. You've got division strategies, then specific business unit strategies, and finally right down to strategies for individual products or services.
And each level's plan is sort of guided by the one above it, right? It all has to connect.
Exactly. And the sources position the marketing plan as really the central instrument for directing and coordinating all the marketing activity within a specific business unit. It's
Yeah.
kind of where the rubber meets the road.
And that operates on two levels itself, strategic and tactical.
Yeah, strategic marketing lays out the big picture. Who are our target markets? What's our value proposition? Why should they pick us?
The what and the why.
Precisely. And then tactical marketing is the how, the nitty-gritty, product features, pricing, promotion, how you actually get it to the customer, the channels.
Okay. And the sources outline a pretty standard process for this at the business unit level, the business unit strategic planning process. It starts with the mission.
It all begins with defining the core purpose, the business mission. What fundamental problem are we solving here? Who are we actually serving? What makes us unique, maybe even within our own larger company?
Got it. So once you've got that mission, your kind of North Star, the next big, really crucial step, according to these sources, is assessing where you stand and what's going on around you. And that brings us squarely to SWOT.
Ah, SWOT analysis. Yes. This is really the anchor point for understanding the environment. It's that overall evaluation of a company's internal strengths, internal weaknesses.
And external opportunities and external threats.
Got it. It forces you to look both inward and, really importantly, outward.
Okay, let's take the outward look first, the external environment. Opportunities and threats. How do the sources define a marketing opportunity?
Simply, it's an area where there's a buyer need or interest that your company could realistically satisfy profitably. That last part's key.
Right, it's got to make business sense.
And they break down where these opportunities might actually come from. One simple source is just offering something that's, well, in short supply. Basic supply and demand.
Okay, makes sense. What else?
It's more interesting. The second source is supplying an existing product or service, but doing it in a new or superior way.
How do you find those?
The sources suggest a few methods. Like, you can ask customers directly about their problems as problem detection, or have them describe their ideal version of something, the ideal method.
Okay.
Or, and this one's quite interesting, charting every single step a customer takes, from first thinking about a need all the way to, say, disposing of the product. They call it the consumption chain method.
That consumption chain idea sounds powerful. You could find bottlenecks or frustrations you never even considered.
Exactly.
Yeah.
And those gaps, those little frustrations, they can actually lead to the third main source of opportunities, creating a totally new product or service, something nobody even knew they needed until you put it out there.
The sources have some great examples here, like converging trends who thought your phone would be your main GPS device years ago.
Right. That came from mixing mobile tech and location tech, or making something tedious really convenient. Remember mobile speed pass? Paying at the
Yeah.
pump without swiping a card changed that little step completely.
Or meeting a need for trusted advice, like Angie's List does for home services.
Yeah, or customization. Letting you design your own Timberland boots online. That's offering something unique.
Introducing a new capability, like the iMac making video editing easy with iMovies. Suddenly anyone could do it.
Faster delivery FedEx basically built a business on that. Or simply a much lower price, like generic drugs taking on the big brands. They all come from spotting an unmet need or just a better way.
But spotting it isn't enough, right? The sources talk about evaluating these opportunities.
Yes, market opportunity analysis, or MOA. It's about asking the tough questions. Can we actually describe the benefits clearly? Can we reach this target market without breaking the bank? Do we really have the skills and resources needed?
And crucially, can we do it better than the competition?
Exactly. And bottom line question, is a financial return going to be worth the risk and the investment?
Because an opportunity might exist, but if you can't execute it well or make money, it's just an interesting idea, not a real business opportunity.
Precisely. Now, flip that coin for the external environment, and you get environmental threats. These are those unfavorable trends or developments out there that could really hurt your sales or your profits.
And the sources say you need contingency plans for the big ones.
Definitely. For major threats that seem likely to happen and could cause significant damage, you need a plan B.
Okay, so that's the outward look, opportunities and threats. Now let's turn inward for the other half of SWOT, strengths and weaknesses.
Right. This is where a business needs to be really honest with itself. What are we genuinely good at? Do we have a strong brand? Skilled people, efficient processes, unique tech.
And the flip side, where do we fall short? Are our systems clunky and outdated? Do we lack expertise in a critical area? Is our company culture actually holding us back?
Yeah, and the sources pose a really fundamental strategic question that arises from this internal look. Should a business just stick to its knitting? Only chase opportunities that match its existing strengths?
Or should it be bolder? Maybe go after a great opportunity, even if it means having to build new strengths, develop new capabilities.
That feels like a core decision about identity, about risk, about growth.
It absolutely is. So once you've done this honest SWOT analysis, looked outward, looked inward, the planning process moves to goal formulation, setting objectives.
Right. And the sources emphasize they need to be specific, measurable, achievable, relevant, and time-bound. Smart goals, basically.
And then strategy formulation, crafting the actual game plan to hit those goals. The sources mention classic frameworks here, like Porter's generic strategies.
Yeah, competing on cost leadership, differentiating your offering somehow, or focusing really intensely on a specific niche market segment.
There's a sharp distinction the sources make here that seems important. Operational effectiveness versus strategy.
Oh, yes. This is key. Operational effectiveness is about doing things right, being efficient, improving quality, running a tight ship. But the sources argue this is often easily copied. Your competitors can just benchmark you and catch up.
So it's not a lasting advantage.
Not usually. Strategy, on the other hand, is about doing the right thing, choosing a unique position in the market, performing different activities than your rivals, or maybe similar activities but in really distinct ways. That's where sustainable advantage comes from.
Okay, that makes sense. Being different, not just slightly better at the same game.
Exactly. And then comes the challenge of actually making it happen. Strategy and implementation. Strategy is the what's and the why. Implementation is the messy who, where, when, and how.
And getting that alignment is tough. The sources mention things like McKinsey's 7S's model linking strategy to structure, systems, skills, staff, style, shared values.
All those internal elements. And they highlight company culture as particularly critical for making strategy stick, even though it's often the hardest part to change.
So effectiveness, doing the right thing, is more important than just efficiency.
Ultimately, yes. But the sources note that the really top companies, they manage to excel at both. They're both effective and efficient.
Okay, so we've covered setting the mission, using SWOT, formulating goals and strategy, and the challenge of implementation. But none of this works without really good information about the market itself, which leads us nicely into understanding the market and forecasting demand.
Precisely. All that strategic thinking relies on solid information. And the foundation for gathering, sorting, analyzing, and distributing that information is what the sources call the Marketing Information System, or MIS.
Right, it's the engine room for data. What are its main parts?
The sources break it down. You've got internal records, stuff like sales data, orders, costs. The whole order-to-payment cycle is a core example of internal data flow.
Okay, what else?
Then there's marketing intelligence. This is more about the everyday information gathering, scanning the environment, reading publications, talking to customers and suppliers, monitoring social media.
The sources mention cookies here, right? For tracking online behavior for targeted marketing.
Yep, that's a classic example of marketing intelligence gathering using technology. And you can't really talk about this today without mentioning big data.
Ah, yes, the buzzword. But the sources give it some structure with the 4 Vs.
They do. Volume, just the sheer amount of data. Velocity, how fast it's coming in. Variety, all the different types of data, structured and unstructured. And volatility, how quickly it changes or becomes outdated.
So just massive floods of information coming at you constantly from everywhere. Clicks, posts, sensors.
It's a huge management challenge,
Yeah.
definitely, but also represents incredible opportunities for insight if you can handle it.
Yeah.
Think about Tesco using loyalty card data to tailor offers, or Amazon's recommendation engine that's all fueled by analyzing massive data sets.
Okay, so if MIS and big data provide ongoing streams, marketing research is more focused.
Exactly. It's the formal, systematic approach to studying a specific problem or opportunity. The sources lay out a clear 6-step process for it.
Step 1?
Define the problem clearly. What decision do you need to make? What are the alternatives? What specific information do you need the research objectives?
Get the question right first. Then step 2 is the plan.
Develop the research plan. Where will the data come from? Primary data you collect yourself, or secondary data that already exists? What research approach? Observation, focus groups, surveys, experiments. What tools, questionnaires, maybe qualitative techniques, even tech devices. Who will you sample? How will you contact them? Lots to figure out.
Step 3 is actually collecting the data. The sources say this is often the most expensive part and where errors can creep in easily.
Very true. Step 4 is analyzing the information you've collected. Step 5 is presenting the findings, turning raw data into meaningful insights for the people making the decisions.
And the final step, 6, is making the actual decision based on those findings.
Right. The sources use that American Airlines Wi-Fi example to illustrate this. Should they offer super-fast Wi-Fi in first class? Research helps answer questions like, how many people would actually pay for it? What price point works? Would it attract new flyers? Is the investment worth the potential return?
And you could use different methods to find out.
Yeah, maybe observe passengers in lounges. Run focus groups to get qualitative feedback. Do surveys for quantitative data on interest and price sensitivity. Analyze booking data. Or even run a small experiment. Offer it on a few flights at different prices and see what happens.
And the tools could be anything from a simple questionnaire to, like, biometric sensors measuring reactions.
Potentially, yes.
Yeah.
The point is, this structured process gives you evidence to make a more informed, less risky decision.
Okay. And all this information gathering, MIS, big data, research, it all feeds into one really critical output: forecasting sales.
Forecasting, yes. This is where planning really hits the operational side of the business. Getting this right is so important.
Why specifically? The sources list a few reasons.
Think about it. Finance needs the forecast to manage cash flow. Manufacturing needs it to schedule production. Purchasing needs it to order raw materials. HR needs it to plan staffing levels. If your sales forecast is way off,
You either have way too much inventory sitting around or you run out of stock and miss sales. Neither is good.
exactly, it causes massive headaches. So the sources give us a helpful way to think about measuring market demand, starting really broad and then narrowing down.
Okay, like layers. What's the biggest layer?
The potential market. That's basically everyone out there who might conceivably have an interest in the product category and has enough income and access to potentially buy it, the widest possible pool,
Then you narrow it down.
to the available market. These are the folks within that potential market who also have the interest, income, and access specifically for your type of offer.
Okay, makes sense. Next.
The qualified available market. This adds specific qualifications needed. Maybe you have to be over 21 for alcohol, or need a certain license, or have a specific medical condition for a drug. It filters further.
And then comes the market you actually go after.
Right. Your target market, that's a specific segment within the qualified available market that your company decides to pursue with its marketing efforts.
And the final layer, the people who actually buy.
The penetrated market. These are the customers within your target market who've actually purchased your company's product or service.
Understanding these layers helps you plan, right? You can see where the drop-offs are.
Exactly. Are you failing to convert your target market? Maybe you need better marketing. Could you expand the qualified market by removing some barriers? Could you reach a wider available market, maybe geographically? Or do you need to reposition entirely to appeal to a different available market? It gives you strategic options.
The sources also introduce this idea of the market demand function. What's that about?
It's basically saying market demand isn't one fixed number. It's a function. It depends on various factors. It represents the total volume that would be bought by a specific customer group in a specific place and time under defined environmental conditions and at a defined level of overall industry marketing effort.
So industry spending matters for the total pie size.
Right. And the graph in the source illustrates this. You have the market minimum,
Yeah.
Q1. That's the base level of sales that would happen even if the industry spent nothing on marketing, just the organic demand.
And the other end.
The market potential, Q2. That's the theoretical upper limit. What total sales could be if industry marketing spending was practically infinite, capturing almost every possible buyer.
Why is that distinction important?
It helps differentiate market types. In expansible markets, that gap between Q1 and Q2 is big. More industry marketing really grows the total market size significantly.
So marketing grows the whole pie.
But in non-expansible markets, the gap is small. The total market size is relatively fixed, regardless of marketing spend in those markets.
Your marketing is more about stealing share from competitors, not growing the overall market.
Exactly. You shift focus from stimulating primary demand, growing the pie, to winning selective demand, getting a bigger slice.
Okay, got it. And the actual forecast isn't that maximum potential Q2.
No, that's a crucial point. The market forecast is the expected market demand based on the actual level of industry marketing effort that's anticipated. It's the realistic, most likely scenario.
Then you get down to your own company's piece of that.
Right. Company demand is your estimated share of that market forecast based on how much you spend on marketing, your mix, your effectiveness compared to competitors. And the company sales forecast is the specific sales level you expect to achieve based on your chosen marketing plan and the assumed environment.
The sources also clarify terms like sales quota and sales budget. They aren't the same as the forecast.
Often not. A sales quota might be set higher than the forecast as a goal to motivate the sales team. A sales budget is usually set more conservatively, maybe a bit lower than the forecast, because it's used for planning critical expenditures like buying materials or setting production. You want to be cautious there.
Okay. So how do you estimate current demand before forecasting the future?
The sources mention a couple of methods. For total market potential, you might multiply the number of potential buyers by the average quantity they buy and the price. For area market potential, especially BDB,
Like business to business.
you might use a market buildup method. Identify all potential business customers in an area using industry codes, like NAICS codes, and estimate their purchasing potential.
And for consumer markets, B2C.
The multiple factor index method is common. You combine several factors like population, income, retail sales in an area, may be weighted to create an index of relative buying power for different geographic areas.
So you get a sense of the market size today. Then how do you estimate future demand?
It's often a top-down process. Start with a forecast for the overall economy, the macroeconomic forecast, then use that to estimate demand for the entire industry. And then develop your specific company sales forecast, considering your planned market share and strategy.
And the sources list specific techniques for that company forecast, right? A few different methods.
Yeah, 5 main ones are mentioned. You can do a survey of buyers' intentions, just ask customers if they plan to buy. Simple, but intentions don't always equal purchases.
Or ask your sales team.
Right. A composite of Salesforce opinions. They're on the front lines talking to customers. Can be quite accurate, but salespeople might be optimistic or pessimistic.
What about experts?
Expert opinion. Bring in consultants, dealers, industry analysts, get their collective judgment.
Or just look at past data.
Past sales analysis. Using historical data, time series analysis, looking for trends and projecting them forward. It's common, often easy, but assumes the future will resemble the past, which isn't always true.
And the last one, testing market.
The market test method, especially for new products. You launch it in a limited area, a few representative cities maybe, and see how actual sales perform before committing to a national launch. It gives real-world data, but can be slow, expensive, and tips off competitors.
So different tools for different situations.
Exactly. Often companies use a combination of methods to get the best possible forecast.
Wow. Okay, that's a deep dive into demand and forecasting. But the sources make it really clear that all of this, the strategic planning, the SWOT, the information systems, the forecasting, it all depends on understanding the even bigger picture, the macro environment.
Absolutely. You cannot do effective planning or forecasting in a bubble. These are the huge, broad forces shaping the entire world your business operates in. They create opportunities, they create threats, and you have to monitor them. The sources list 6 major ones.
Okay, let's run through them. First up, demographics.
This is about the human population. Things like overall growth rate, geographic shifts, age distribution. That global trend towards aging populations is huge. Changes in family structures, fewer traditional households, more singles, childless couples, ethnic and racial diversity within markets. Think about the shifting Hispanic population in the U.S., for example. These change who your customers are.
Right. Then the economic environment.
This is about purchasing power. Consumer psychology, how confident are people feeling? Income distribution patterns across different types of economies and within countries. Factors like income levels, savings rates, debt, credit availability. The sources directly link this to how recessions impact spending, vital for forecasting.
Third, the sociocultural environment, people's values and beliefs.
Exactly. How people view themselves, others, society, nature. Their core cultural values, things like views on work, marriage, honesty, which tend to be pretty stable, versus their secondary values, which can shift. The MAD example, Mothers Against Drunk Driving, shows how a group successfully influenced a secondary value. Also, the influence of subcultures, like teenagers often being trendsetters.
Fourth, the natural environment. This feels increasingly important.
Hugely. Growing concern for sustainability. Potential shortages of raw materials, especially finite non-renewable resources like oil, which drives innovation in substitutes. The rising cost of energy. Concerns about pollution levels, creating markets for control solutions, and the whole movement towards corporate environmentalism or green business practices.
Fifth, technology. This one feels like it's always accelerating.
It really is. The accelerating pace of technological change. Seemingly unlimited opportunities for innovation. The iPad example shows how fast things can take off, but also varying R&D budgets across countries and increased regulation around new technologies. Tech changes not just products, but how we live and how companies operate.
And finally, the political legal environment, laws and regulations.
Yep. Business legislation designed to protect competition, protect consumers, protect the broader interests of society. Think about mandatory recycling laws creating a whole industry. Also, the rise and influence of special interest groups, like consumer advocates or privacy groups. These forces really define the rules of the game for businesses.
So looking back at everything we've covered, you really see the threads connecting. Effective strategic planning, starting with the mission, really hinges on that deep market understanding you get from something like SWOT analysis.
Absolutely.
Yeah.
And that understanding,
Yeah.
in turn, it relies completely on having good information systems, your MIS, leveraging big data, doing proper marketing research when you need specific answers.
And all that foundational work feeds into the absolutely vital process of measuring and forecasting demand accurately, which then drives operations, finance, everything.
But none of it happens in isolation. It's
No.
all constantly being buffeted and shaped by those big shifts in the macro environment, demographics, economy, culture, nature, tech, politics.
Exactly. Getting these insights, connecting these dots, it's not just, an academic exercise. It's absolutely fundamental if you want to make informed strategic decisions and actually succeed.
It's about replacing guesswork with insight wherever you possibly can
Right.
and trying to anticipate what's coming next.
Which leads us to a final thought for you, the listener, to chew on. Given this constant, maybe even accelerating pace of change across all those macro forces we just touched on, tech, demographics, the economy, cultural shifts, how can organizations ensure their strategic plans and their demand forecasts aren't just reflecting today's reality? How can they be built to be adaptable, resilient, ready to anticipate and thrive in whatever tomorrow's market looks like?
Yeah, what does that really imply about the need for continuous learning? for constant monitoring and maybe a fundamental willingness to pivot and change course when the environment demands it.
It's a huge challenge. It suggests strategy can't be a static document you write once a year.
Definitely not. It has to be a living process embedded in the culture.
Well, that's definitely something to think about. Thanks for diving deep with us today.